We're snorting cap rates and shooting up cash flow here at Deal Junkies. Welcome back to Deal Junkies.
That hurt. Ow.
Mike gave us the clap, and it hurt. Ouch.
Don't cut that up. It's like my triple dip.
Can we get like one of those little things, like a little like
take action.
Yeah.
Take one. Here we go.
That would just be fun. I always wanted to do one of those.
All right. We're back, guys. I promise we'll pull it together here somehow. We want to talk about today the art of the deal. Mike wants to talk about negotiating tactics, how to put a deal together, how to win a deal, when to hold them, when to fold them.
Gotta know when to hold them.
There you go.
Know when to fold them.
Know when to walk away.
Know when to walk away.
And know when to run.
And when to run.
I have a question for you.
This is the worst episode ever already.
Do you know who sings that?
Billy
Trevor?
Joel.
No.
No, is it the guy you saw in Hawaii? Is that the guy?
No, I did not see Kenny Rogers in Hawaii.
Oh. No, I don't know who sings
He
that.
is no longer with us.
Dude, Kenny Rogers.
R.I.P. Kenny Rogers.
Okay.
Yes.
No, I have
Good
a deal
man.
on this topic.
Okay.
And the Beach Boys. Kenny Rogers and the Beach Boys. Foundational to my youth.
So I used to have brokers send me deals and tell them, like, they would tell me why this is a deal or why you should buy it or whatnot.
Mm-hmm.
Now I tell them, like, why or why not to try to give more feedback. Here's what we buy. Here's why we buy it, so they know better.
Mm-hmm.
It's like a lot of people will send us a deal and be like, this is a great deal because you can raise rents $100 on these units.
Mm-hmm.
And I'm like, okay, this is why we wouldn't buy it, because we're not just going to park capital in there for that small return. It doesn't make sense. We want a heavier value add, or we will buy that deal, but we need some creative component to make it actually pencil, right? My question is, who buys those deals that are just like, it doesn't have like the components that we buy, like $100 rent? Is it just 1031 people that are just parking money, tax advantage? Like who is buying that product? Like how are they selling that?
You know, it's funny. Being a broker, oftentimes somebody will call you and say, I want to sell this, and you'll tell them, okay, I think it's worth $4 million. They'll go, but I want $5 million. And some brokers will just say, okay, fine, whatever, we'll list it for $5 million and hope for a 1031 buyer. They call that buying the listing. Mm-hmm. And sometimes it makes sense if they are in the process of raising rents and you're really in an upswing market and you know they're willing to be flexible and maybe come down to 4.5 or something, and you can get a buyer to stretch. It makes sense. But the reality is nobody's buying that deal. I mean, if the deal doesn't make sense, you may find a 1031 buyer.
I guess 1031 if you're going from smaller plex to bigger deals, maybe. Or
if you, I mean, you know, have you heard of the bigger fool theory? So it's like, you know, somebody will come along that's dumber than the guy who bought it and buy it again. That could potentially happen. But there was a day where there weren't very many deals on the market, and people were just banking on this cycle running forever and ever and ever, and everyone was just like, had FOMO, like we just got to buy deals, and they were buying deals. Some of them didn't make any sense. There are other people, and I think you have to recognize that not everybody looks at a deal the same way, and they're trying to accomplish something different than what we're trying to accomplish. So not everybody's looking for leverage. Not everybody's looking for the same cash-on-cash return. Some people are using investor funds and syndicating, and they might be able to access different capital than we are. They might be able to get a lower interest rate loan. They may have... You know, it is a very real possibility that you can have a 1031 and you don't want to pay taxes. But the reality to that is you're only going to overpay so much. It's not like I'm going to try to avoid a $500,000 tax bill by paying $1 million more for a property than what it's worth. It just doesn't make sense. So I think the whole like we're looking for a 1031 buyer thing. Maybe when there were no deals on the market, you could argue that you could throw a few of those out there and maybe somebody might take them. But I think in today's world, if you're not priced correctly, it's mental masturbation. You're just pretending to sell. You're not really a seller.
Yeah, because now I've looked at so many deals, it's just like, okay, I can know you're telling me this deal. I know the general basics of it. Like, here's why I won't buy it.
We could look at every deal on the market today and know that in 5 years we would like to own every single one of them. Yeah. But we can't buy every single one of them, so we're going to buy the best deal.
We have limited time, energy, and resources.
Yeah, so we're only going to buy the best deal that's on the market. So it's supply and demand. We are not going to buy every single deal. We have to pick which deal we're going to buy, and why would we buy one that's worse than another deal that we could buy?
Because most of them are being advertised as like, hey, here's a 1970 building. It's a 5.5 cap, and you can take it to a 6 cap at market rate.
And what does that do for you?
And then you subtract 1 because they did their math wrong.
Yeah, we want to go buy a 4 cap that we can turn into a 12 cap, right? I mean, we're playing a value add game. We're playing a much different game than some. Now, think about this. There's preservation and there's growth. And some people park their money in real estate as a preservation tactic. We're going to start, Mike talks all the time about allocation. So we're going to see now the stock market has lost $3 or $4 trillion in the last 50 days of value. Some of those people are going to get scared and they're going to go, I want to come out of stocks. And one of the asset types they'll go into is real estate. I would rather overpay for a building right now and at least know that my money is sitting in a hard asset than sitting in the stock market, which I'm afraid is about to crash. I mean, it's so as that money reallocates to real estate, you'll have more people willing to accept lower returns, and I think you'll have more dollars fighting for the assets that are out there. And right now we happen to have a lot of assets available because not a lot of deals have been transacting over the last
It's really important to understand who the buyer is and why they're doing what they do, so know your audience. And one example, early in the recession in 2022, BlackRock started selling off a lot of their portfolio. A lot of the real estate they had bought, they started selling. In the headlines are BlackRock selling, markets crashing. No, they had a crap ton of appreciation. It's a great time to sell, great time to liquidate all those assets, get all of that real estate off your books, turn it into cash. What's BlackRock doing now?
Scooping up assets.
They're now starting to buy real estate again. They're creating those funds again. They're they're putting the liquidity in there, and now they're going to go buy real estate because why? It's much better time to buy it.
Better time. Well, and there is an argument to be made that, like Paul says, that the system is rigged. And we watch BlackRock. He says, actually, you don't need to know anything about real estate. Just follow what BlackRock is doing. When they're liquidating, that's when you should be liquidating. When they're buying.
That's a great statement. And don't do the headline like, look at them, the market's crashing. No, well, they're doing this for a purpose, and they're really good at what they do. So maybe this is what other people should be doing.
Yeah, we saw them starting to buy multi-billion-dollar portfolios over the last 3 to 6 months. And it's like, Main Street's following. It's coming soon. You look at even like Warren Buffett sitting on $250 billion in cash, for the first time holding more cash than the Fed is holding in reserves. Why would a guy like that, the greatest investor of all time, supposedly, they call him that, and I would tend to agree, especially in the stock market, why would he sit on so much cash right now?
Opportunity cost the highest they've ever been.
Because he knows the deals are coming, and he wants to pounce when they come.
And what does he buy? He buys businesses.
Yeah.
Right? So if you look at him, he clearly probably believes, that a recession is coming.
And
because that's when you get businesses.
He sees things like Tesla, which may have been a little overvalued, which now might be a little undervalued, and go like, he knows when a deal is a deal. Like when we look at a building, we go like, that thing's $150 a door, we can buy it for $100 a door. We know we're making a deal. He knows the same thing when he's buying a business. And so I think really he's on the sidelines knowing the market was pretty frothy and that there were some profits that they needed to take. And he stepped out of a lot of banks and he stepped out of a lot of different industries that I think you got to watch, which means to me it's a leading indicator we're going to see some turbulence in the banking world. We're going to see some turbulence in the stock market, and we're going to start to see more money get allocated into commercial real estate assets. So why would somebody buy, to answer your question? They may be coming out of an asset where they're just trying to protect their capital, and so they're preserving it by moving it into a hard asset, knowing even if that asset moves down a little bit in the long run, they're going to be fine. The other thing that we're hyper-focused on because of our age and where we're at in our investment cycle is we want growth. And that's why we don't want to buy a 5.5 cap and turn it into a 6 cap. We want to buy a 4 cap and turn it into a 12 cap. is because we're trying to generate huge equity pops immediately so we can get a base underneath us. Once we get a little older, and I'll get there before you do because I'm older than you, there will come a day where I will say, I don't want to take that risk. I want to take what I've built and let it throw off a nice income for me, and I'm not willing to risk losing this to go into this next deal. Whereas when you're younger and you're growing, you take the risk because otherwise one of the advices I've given people that I've mentored over the years is that they shouldn't try to go into protection mode when they're too small. Like, people will save up $100,000 and then hold on to it for dear life. And I'll tell them, you don't have enough yet to be in that mode. You can't be in preservation mode. You need to be in growth mode. But there comes a point where you've grown enough to where you have built what you need to build, and it may be fun to continue to build it, but there's no reason to take the risk to lose what you've built to go do some deals, and you start to become pickier about the deals that you do. But I think real estate is as unique as human beings, and I think one deal that looks like a deal to us doesn't look like a deal to somebody else. It's one of the things where I believe in the abundance mindset, where people go like, well, you guys are brokers and you're also out buying deals, so you're obviously going to go buy all the good deals. Well, define good deal, because what we think is a good deal and what they think is a good deal are two totally different things most of the time.
Yeah, people don't like that.
Yeah, everybody, like, the idea of, you kept mentioning buy at a 4 cap and take it to a 12 cap. No one evaluates the same. You're actually talking about yield. You're talking about the internal. We want to buy something with a 4% yield and make it a 12% yield. Cap rates are the market rate. But even like you go to CoStar and you look at the notes, listing agent said this was a 5.4 cap. Buyer thought this was a 6.3 cap. No one underwrites the deals the same way. And when you're looking at, say, data and you're looking at comps and each comp says that's what the cap rate is, right? Well, are you verifying that that's what the cap rate? How are we extracting this information?
And the three of us sitting in this room all underwrite a deal, and we'd all come up with a different cap rate.
Well, actually, you typically come up with the same cap rate I do, but
I do it in 30 seconds, and it takes you like a week.
It takes me 10 minutes, but
maybe 45 minutes.
But I'm looking at future.
I think
you're pretty spot on
at
that too.
At what point in your career did you get that good?
Well, it was the way I was taught to underwrite on. I was taught to underwrite on a calculator instead of on a spreadsheet, like a literal calculator. And so you
just punch a bunch of numbers in.
Yeah, it's just back of the napkin. It's easy. It's a good general.
It's not even hard. I just take the rents times 12
ratios.
Months times 5% vacancy.
Times 0.95,
and then I either take out 25 to 45% expense, depending on the age
and where the rent's at.
Yeah, and I go, I think it's about here. We just did this the other day, and we were looking at a building, and I say, I think it's going to end up at about $410,000 or something.
We're like $1,000 off.
And Trevor goes, well, I did a spreadsheet. Our model says it's $411,000. I literally did it in my head. You know what I'm saying? Mm-hmm. Like, it's not as hard as people. I mean,
and that's just for like an in-place asset value of things. Like what we're looking at is like, okay, how do we actually change these things, and how does it trend over time? And then how do you match that with a debt stack that actually pencils?
And that's the different part. And the reason because you have experience of these types of assets, and you've come over time to understand they kind of fall in this expense load. If your rents are 80% of market value, well, then that expense load actually means it's a higher expense load.
Yeah.
And so you're just understanding, you're looking at like, oh, well, with those rents, it needs to have this expense load.
And I'm not too worried about the trailing data, to be honest, because I know how I'm going to operate.
Right.
I'm not too, there might be some things you pull out of there like, oh, crap, there's flood insurance.
You use them for negotiation and for the details of your evaluation.
Yeah, you go like, your numbers suck or whatever, but I have a pretty good idea of where we can operate that property with some certain outliers that we're looking for. We want to go, we want to find the big elephant in the room that's like, oh crap, this thing runs at a much higher expense because you're in an area where water costs 3 times as much, or the taxes are crazy, or whatever. There's going to be something that's a little different about that property that'll throw that expense ratio off. But you can do most of this on the back of a napkin, I think. But to your point, like I think cap rates are sort of a slippery slope, and I've had clients and even some of our brokers that are very analytical minded, and they'll take a broker's word for what the cap rate is, and then afterwards go like, they lied to me. Like, this is not the way it operates. Well, a broker's job is to paint the prettiest picture they can possibly paint. I'm going to show you on the sunniest day of the year how this property operates. It's up to you to go bake in all the stuff that's negative that goes like, oh, but this could go wrong and that could go wrong, and it's probably going to cost more to turn that unit, and so on and so forth. Like, all we do is really kind of take an appraiser approach and use we're on the same bandwidth of what an appraiser would use for industry standard, except an appraiser might be somewhere closer to the conservative side and a broker is more on the aggressive side, where we're trying to make the value look as good as we can possibly make it. So when you see a deal on the market and it says it's a 5.5 cap on actuals, well,
subtract one.
It's a 5.5 cap on actuals because they moved all the expenses below the line into CapEx and said like, oh yeah, you turned 8 units last year, but we called that CapEx instead of expense. Now you have no turnover budget because they've moved the number down.
Yeah, one of the things you mentioned on one of the podcasts is it's okay to have a different set of books that you give the bank and then what you actually give to your CPA and pay taxes on. And that was a huge thing for me. I look back to like COVID when we weren't really getting commercial loans. We were just giving them our freaking all of the data. And then the lady was like, well, your debt coverage isn't high enough. I'm like, what are you talking about? Our freaking LTV's 50%. Like, how? Well, yeah, because there's some CapEx thing. Like, there's a lot that should have been stripped out. It should have been stripped out and given to them in a different way. And now I'm learning that, we actually need to really package it for the broker so that way they're an advocate for us. You
need to paint the picture of how it actually goes and what the costs are going forward.
Paul builds a spreadsheet on every one of our buildings, and he's really good at this sort of thing. And it explains why we file our taxes the way we do. Mm-hmm. And we do move as much as we can below the line because we're building depreciation. We don't need the write-off. Right. But like in most partnerships, everybody wants to take as much loss this year as they possibly can. They want to call it expense, not capital improvement.
Exactly.
And so they'll even do cost segregation studies, try to accelerate that. And everybody's going like, hey, we can take this huge loss that's fake, and now the property won't pay taxes for 3 or 5 years. Plus, we can use that against the other income we're bringing in if we're real estate professionals. And so everybody's trying to, every CPA is programmed to save you as much money on taxes today as you possibly can. The CPAs will do a tax return for us, and Paul completes most of ours, but sometimes we'll use a third party and he'll get it back, and every single time he's pissed off. He's like, this is exactly what these professionals do, is they're always trying to write it off in year one. They don't realize we're going to run out of depreciation. So he actually decelerates depreciation. Rather than taking it over 27 and a half years, he'll press it out to 35, 40, 50, 60 years.
I'm so happy you brought this up because bonus depreciation is a drug that people do not freaking realize. If you're taking bonus depreciation, you're just accelerating the tired landlord that can't sell their property.
If you're going to hold the property for 5 years or 7 years, I could see, like, let's take all the depreciation.
And you're going to 1031.
And you're going to 1031. Mm-hmm. I could see the benefit of doing that because you could save a ton of money on taxes and move your basis over. Right. Like like the CPA that I talked about, well, obviously that basis is going to fall you into the next property, and now you have a much bigger tax exposure each time you make that trade. Correct. And you get to the point where you can never actually sell and take the cash, or they'll take half your profits.
And that's where it becomes perpetual 1031s of trading and trading and trading.
Yeah, you paint yourself in a corner a little bit. Yeah. You're not set up in a way to where if I wanted to liquidate this one or that one or whatever, it now no longer makes sense.
And that's where you can be a true magician by understanding that, this is a really good lever, but we probably shouldn't pull it in this context of this deal because it sets us up for failure down the road in this aspect.
Yeah. So going back to Trevor's point, you're talking about how do you talk to brokers when we're talking about the art of the deal.
I was just wondering who's the taker for that. But
well, here's the thing. Here's what I'll say about real estate is, I've said this before, is you can learn how to negotiate a lot better on a car lot than you can in a real estate deal. Everybody puts a listing up, and the listing goes up, and people go like, oh, that house isn't worth $1.3 million. It might be worth $1.1 million or whatever. And nobody writes an offer for $1.1 million. They just go to the next deal.
Because you have days on market versus minutes in the car room.
Yeah. It's just kind of like, oh, well, the price was wrong, and that's what they want, and so I'm just going to move on with life. Like, I know a lot of examples, and we're doing that today, where we see a deal and we're like, we like that deal, but not at that price, or we need different terms, or we need you to carry, or we need to do something else. And you're having those conversations, Trevor, with brokers, and you're saying, I want this deal, but I'm trying to make sense of how it will work for us. Can you help me make sense of it? And the answer is no. They can't help you make sense of it because they represent the seller. The seller wants a certain price. They're trying to do their best to justify that price, and they have no way. What you're doing is you're trying to make them admit that they're lying about their numbers and the deal doesn't make sense. And that just pisses them off, and then they don't want you to email them or call them anymore, right? They just want somebody to come along and put it under contract. You would be better off to write the offer and go like, I love your numbers, guys. We want to buy this deal. Write the offer, and then we do our due diligence. And 10 days later, call them and go, guys, you told us this thing was going to NOI at this, and it doesn't. And
they
here's
don't like
why.
That either.
I know.
There's a few types of brokers. There's brokers who want to do deals, and there's brokers who don't want to do deals.
Which is
so
weird.
It depends on which one you're talking
weird.
to.
But forget about the broker for a minute, because the person you're really negotiating with is the seller. And they have a broker that's in the way, and brokers are sometimes the only thing that are in the way of a deal getting done. And a broker may tell you one thing, and their seller may feel completely different. To get an actual offer in front of them, now the seller goes through an emotional process over that first week or two. They're starting to spend that money in their mind. They're out looking for a deal, or they're thinking about what they're going to buy or how that money's going to hit their bank account. And they're starting to fall in love with the idea that the deal's actually going to happen. And then you get to the point where you go, guys, we've been through the numbers and they don't line up with what you told us. Can you tell us why? Maybe they'll have some explanation to where it's a little better than what we think it is. Then we go, okay, we get it. Now we're all on the same page for what the number is. This is how the deal works. And I think that your chance of putting that deal together is like better than 25%. It might be 50-50, whereas going in on the front end and being combative with a broker and going like, hey guys, I want to do this deal, but I can't make sense of your numbers. A broker's just going like, next. I don't have time. I'm on the phone. I'm on the email. I'm trying to find the next buyer for this deal. I don't have time to sit and argue with Trevor GPT on why my deal is not a good deal.
Yeah, the hard part is we don't like to retrade, because we want to be a good buyer. So, but I guess sometimes
some deals need to be retraded.
Yeah,
it's just the way it is. And by the way, you're not retrading on purpose. You're retrading off of their numbers, right?
And that's a negotiation in and of itself. Do you put an offer forward with the intention to retrade just so your offer looks get better at the front end?
A lot of people do that. We try not to.
Yeah.
We think that that's sort of a dirty tactic.
I agree.
So on that 20 unit we were looking at that we didn't win, we should have
retraded.
Yeah, we should have just been like, we'll pay you $100,000 over the next highest offer, and then retrade it.
Think about our roofing contractor. He gives us a bid. He tells Trevor this the other day. We go, hey, you bid us this roof at $30,000, and it ended up being $60,000. That's a 100% change order. How does that work? And he says, well, I have to give the low bid so that I can win the jobs, and then afterwards I raise it to whatever it actually costs.
Oh my gosh.
So we're not going to use that contractor
anymore.
Holy but shit. There are buyers out there. Now, if a buyer comes in and says, I don't retrade, and for everyone listening doesn't know what retrade means, it's just renegotiate a deal once you already have it under contract. In a residential deal, when you go under contract, everybody feels like the deal, like brokers will say it's sold, and it's not. You just got started. In a commercial deal, it's contingent upon your due diligence, your inspection, and all these different things. And so retrading is, you went and you did your due diligence, you did your inspection, you said, hey, this thing's not as nice as you told me. It needs a roof, it needs this. By the way, your numbers suck, your rent roll isn't what you told me it was. You know, you lied about this expense. You guys spent $50,000 last year on maintenance, and you told us you only spent 10. Like, these numbers don't make sense. Like, we gotta figure out, why are you doing this to us? And they may say, hey, that wasn't really $50,000 in maintenance, it was $20,000 in maintenance, but with the other $30,000 was truly CapEx or whatever. And you got to dig in to those numbers. But retrading is just saying we got to pick a new price, or we got to renegotiate this deal in some way. And it happens all the time. We ask for fixes, we ask for discounts.
Yeah, and if you're giving evidence of I'm retrading because of this, that's that's not negotiation. That's just math.
Exactly.
That's just due diligence.
Exactly.
That's just being prudent.
It's not being dirty.
Yeah.
I've had buyers before that are like, tell them we don't retrade. We're a great buyer, blah, blah, blah. They go through their due diligence. They come to me and they go, Gabe, we did find a few things, but we don't really want to beat them up on that, but we do want a $300,000 discount. And I'm like, you guys had me pitch you as the buyer who doesn't retrade. Now you're going to have me go ask for a discount, and you're not even going to give me a good reason to go ask them for the discount. Like, puts the broker in the worst possible position that they could be in, right? And now it's just like, hey guys, you remember how I told you these guys said they weren't going to retrade? Well, they want a $300,000 haircut, and they didn't really tell me why. And then you just get like the, mother effer, like, what do you puts a broker in a really, really bad position. You got to think about where the broker's at. They're a middleman trying to bring the parties together. You don't want to put them in a bad position.
When I was new to brokering and I sold a park once, the buyer had me do that 1 or 2 days before closing. Like hundreds of thousands of dollars off on like $1 million transaction.
Yeah.
The reason I hate fucking Chris Bayard.
Man, we're never going to make it through an episode without
that
hating
guy's
Chris
name.
Beard.
You're the guys that brought it up. I don't know how, but yeah, same thing. He had already wholesaled the deal, so I negotiated. It was a good deal. He had already wholesaled it. He sent me in there, and I didn't know that. He's just, based on the flip, we need to get it at this price. You need to go get $26,000 off of it. So he sent me in there, and I did it successfully because of fake evidence that he gave me. And then he just made $26,000 more on the wholesale fee.
So that's how you negotiate, you're saying?
No, that's how I learned how bullshit people can be. And I felt so sick to myself that night. Or not that night. When it happened, I went and fucking celebrated. I was like, dude, we got this deal. And then the next day I found out what happened. I was like, you motherfucker.
Yeah. It's dirty.
So how do you negotiate a deal?
How do you negotiate a deal? I educate. I just look at it as negotiation is just communication of education. Especially with the type of deals that I typically buy, is they just don't understand them, and you just, look, you don't understand that we need to do this and this and this and this and this and that cost and that cost and this cost, and then you just educate them on the process of, I know you look at it when we paid $400 and we sold it for $1 million, but we put $400,000 into it and it took us this amount, and so you educate them on that process to try and tie them down into reality. That's what I do. There's a lot of negotiation techniques out there, like mirroring, and that to me is more manipulation, the art of persuasion, so to speak. I look at it as, I want to be able to understand what your problem is. Do I fit to that problem? And the first thing I look for is, if I'm not a fit, I say that immediately. Kind of like what Michael said last night, is like, if they're looking at a good deal, that's a good deal. Go put your money in that deal. If I'm negotiating with the seller, I'm like, I'm not your buyer. You don't want to sell it to me. In order for me to buy it, you're just taking a loss. You should go do this. You're going to be much better when you do that. And so now you're establishing some rapport, establishing some trust. I like to bring a lot of professionalism, which is, hey, I know what we're doing. And that's kind of, then I I negotiate based off of that level of trust that we've created.
I don't think I negotiate at all. You just try to give them whatever they want.
I like the idea of a win-win deal where you start with what the seller needs, because we like to do deals differently than the average person, and we know that we've got to give the seller what they want.
Or you can't get it.
It starts with them, right? And they may want something that doesn't work, and that's fine, but you want to start from that framework and try to back into it, so that they feel like if you're starting with what you're giving them is what they were asking for, you can ask for the things that you want, and you're going to be a lot more likely to get what it is you need. You need more time to do due diligence. You need more time to raise money. You need, a side note. You need whatever it is you need. No payments for a while, or a seller carry, or, there's lots of things that a seller will do to help you put the deal together, especially when they know that you're trying to do a win-win deal. Mm-hmm. You're trying to give them what they want. And sometimes there is no way to give them what they want and get what you want at the same time. The deal doesn't come together.
And when you find a win-win deal, it's not even a negotiation. It's really just finding out what people want.
Your partner.
Yeah. And then they'll understand that. Well, you need this to be successful. And so that's ultimately what you want, is educate to a point where you're like, okay, great. They get it. They understand it, which means they're going to allow me to be successful. And I need to make sure that they're going to be successful. but you want to get to that point.
You said something really important, the word rapport.
Yeah.
Because I think that in the beginning of any negotiation, there's sort of this friend or foe moment that happens. Just like when you meet somebody new and you get an offer, and the question is, who's on the other side? Am I dealing with somebody that's trying to screw me over?
Yeah.
Or am I dealing with somebody that really wants to do a deal and want to work with me to make this work, right? And so to have that rapport, one of our favorite tactics is to have our brokers introduce us to our sellers, when that is almost rule number one in brokerage, is to never introduce your buyers and your sells together.
Fucking hate that.
Probably because they'll try to go around you and do a deal and you don't get a commission
Is that
or
what
something.
it is? I hate the fact that
I think that's part of it.
Oh, God.
Also,
even though they have a freaking listing agreement signed,
but I've also seen deals go sideways. It takes a specific,
I have seen deals go sideways.
a specific kind of buyer that you put with a seller. You don't always want to do that, but a sophisticated buyer, I think, like we understand how to go about having those conversations with the seller and building the rapport to where literally you write an offer and they read the offer in black and white and they just go, forget that, reject.
And
but you ask them to put you on a Zoom call with them, and 10 minutes later they're like, oh, I actually do want to do this deal.
Yeah, and the person on the other end matters, and you need to kind of educate them. You know, like these two deals.
The broker?
Yeah, the broker, right? So these two seller finance deals we're trying to do, the broker was leading it from the get-go because he had talked to the seller. He had some information, you know, the basic level information. But once we started going down the road, I started guiding him. You know, once this problem came up and this problem came up, it was very clear the way I communicated to him, and they were like, you know, a Gabe style email. It wasn't a Mike style email that had wrong punctuation and wrong spelling and some bull. It
was just one sentence.
It was it was a Gabe email that was really long, really clear. This is the problem. Here's how we're going to overcome it. And then this is going to be the next problem. Here's how we're going to overcome that. And then you communicate him with that. And then he's like, oh yeah, okay, you take the lead. You tell me how we're going to go down the road, and then they start following you because you've taken that level. And it's not authority. It's expertise, whatever you want to call it.
Yeah.
In oversight, I guess.
Yeah, the broker's good at bringing the deal, finding the deal, trying to bring you guys together and doing the basics. And then there comes a point where some things are just higher level that need to be done. Their brains are not ready for some of the things that you could. I call it loading their lips. But even with some of the smartest brokers we work with, I try to load their lips with the concept of what we're trying to do. And usually what it boils down to is they go, hey, can we just put you on a Zoom call with this guy? Because they can't say it the way we say it.
Dude,
or whatever.
I advocate for that all the time. All the time. Like, there's some deals that are floating out there. You guys have probably seen them, but seller, you know, smaller built, a non-sophisticated buyer, way overpriced. So a broker's putting a non-sophisticated buyer into this property, which works because of the type of property. Not a good deal. But the other property he wants to work with, it's like, dude, you can't do what you're doing with the small property on the rookie.
Yeah.
You need a professional that has a balance sheet, that can get a commercial loan, that you're holding back a second, which they don't allow. So they need to have a bigger balance sheet, and they need to the person that's going to make that deal successful, you're going to have to work on their terms. If you want your price, you need their terms in order to make that happen. And don't think you're going to get what you're getting over here in a professional manner over here. And so it really understands that not all negotiations are the same. You can go into the same exact scenario, but you have to run it a different way. You have to communicate in a different way.
I have sellers that go, hey, can you think you can hit this price? And I go, yeah, I can find you a buyer that'll hit that price, but their appraiser and their lender's not going to hit that price.
And
what does it do for us if we can't get it sold?
Yeah, correct. And the other thing is, you understand when the broker's the best to do the messaging and when they're not. You know, so for example, I say this a lot to brokers, like, you know the seller much better than I do. You've chatted with them. What do you suggest we do in this scenario? How should we send this message over? And so sometimes you want to take the lead and kind of try and get them out of the way, but then there's sometimes you just want, they're good, let them do what they're good at.
Yeah.
So it's really resource evaluation. It's people evaluation and understanding, are they working with you? Are they helping you? Are they going to be able to help you get this done? Or do we need to kind of get them out of the way and start taking it over.
Yeah, and there's some really smart brokers that are out there, but they still don't see the world through our lens.
Correct. It's not their job to see it through our lens.
That's one of the reasons why we try to bring on brokers that are in the investment world already so that they can see through that lens. But it's much harder for a broker to really understand, like what Trevor's asking right now is like, why would a buyer buy that deal? And the broker would have never listed it if they saw it through your lens. That's why it's harder for you to broker a deal that you don't believe in, is because you're seeing it through your lens of like, I wouldn't buy this deal, but that doesn't mean that there isn't somebody else out there that might buy that deal.
But I feel like I'm good enough now at like, who is the taker for this deal?
Yeah.
Like thinking through, because that's the thing you have to think about when selling a part. Who is the taker so you can market to that person?
Yep.
Yeah, but that's not a broker's job. Broker's job is
That's their that's their only job. That's literally the
it
only
is
job
their
they
job.
have.
They don't think of it in my experience. Few brokers think about it in that.
Yeah, because they all suck.
If you're doing it, they don't all suck.
No, not
But
all of it.
when
Hey,
we always get
all the brokers out there that I do deals with, don't believe Trevor.
the good news is Mike only hates Mike Baird. Trevor hates everybody, so he has way more resentments than you do.
It's Chris
Mike.
Baird, and he's not a
Or
broker.
Chris Baird. Okay,
I don't think he could pass the background check to become a broker.
But you're right. When you think about, I've said this before about the car businesses, we'd say there's an ass for every seat. Like in deals, there are different deals that appeal to different people. There are people of different sophistication. There are people that maybe they own the building next door and they're just willing to pay $100,000 more for that because they want to control the asset.
It's a different value. It's intrinsic value to different people.
To different people,
things.
yeah.
So when I went to Florida and there was the room full of brokers, this is what they hammered every broker. And this is why all these brokers were in there and were doing a lot of deals, is because they could understand the taker of their deal and why someone would buy it.
Well, that takes half the negotiation out of it.
Takes almost all of it
out
well,
of it.
and it's like how to start. So how, like, this is not a deal, but how do you make it into a deal? What does the seller actually need of this? And then communicating that with all the parties. Like, so a dude was selling a freaking grain silo, dude. It was this, yeah. They were
Turn
selling
it into a house?
Dude, they were selling a grain
People
silo.
do that.
This dude brought it up here with like he got shit on for like, who is the taker for this? But they sat down and then helped him form like, why would someone buy this, and went through the thought exercise and watching that happen.
That
I was
probably
like,
was super helpful for people.
dude, it was crazy to see because they
Did
were
they
What was
figure it
this?
out?
yeah, I don't remember exactly what
This
it
is a
was.
1031 group you went to?
It was Society of Exchange Counselors. Yeah, and
Was it
so
just
it's
a bunch of old dinosaurs? Was
yeah,
Pete Fortunato
all old people.
there?
There was one other person my age there, and everyone else there was like 200 people there, and they were all probably average age of like 50
Who
to 60.
runs it?
I don't even remember. I don't know.
It sounds like
I don't know how I
Pete
got there.
Fortunato group.
Don't know. But like that was the biggest thing, is they would bring people up on stage and then they would just shit like in a nice enough way. Some of them, not always.
Constructive criticism.
Yeah, but it's like, what? Like, tell me, why would someone buy this?
Yeah.
And then a basic person would not be able to. And then the seasoned people would be like, okay, let's break it down and educate the room on why would someone actually take this deal, so then they can actually get it sold and do a deal, and then they can take that information to a seller.
That's kind of what we do in our broker meeting. Like somebody brings up their new deal, and then everybody goes like, somebody brought a deal to our last broker meeting. They say, hey, we're selling some weed stores. They're $500,000. And somebody in the room goes, you can go buy an OLCC license for $75,000. Why would I buy your weed store for $500,000? Like, what's the value? And then immediately it's just kind of like you get that immediate feedback before you go out to the market, and everybody kicks you in the teeth.
Yeah.
That's good. It's good to have that sort of feedback, but it's also like what you're saying is, and I think what I was saying earlier, just because the price seems high, 99% of the people just go right by it because they just go like, nope, not going to buy something for $300 a door. Nope, not going to buy something at a 4.8 cap. Like, you just kind of go, you just glaze over. So some of these marketing packages are doing a bad job. Either like, I'm listing a property that I know I'm not going to sell, or they need to be going like, hey guys, it is a 4.8 cap, but it's less than 15 years old and the rents are 35% below market. You can easily turn this into
You have to paint the picture.
Dude,
and then
memorandums are so stupid.
Yeah.
They're like 18 pages of bullshit and one page that you actually care about.
Yeah.
I know.
Fucking brokers.
But I think if you're thinking,
Can I just get a rent roll, please?
Our sellers want us to do them, though.
Just give me a rent roll. That's all I need. Thank
It
you.
makes them feel better that we have a presentation.
Oh God, there's this broker that's trying to, I don't know if he's trying to sell something off market or wholesale it, or, well, he's trying to partner, but it's, dude, he wanted me to show a $2 million proof of funds just to get a rent roll.
What?
Yes.
How expensive is the property?
Can't you just go on
$2 million.
Zillow and see what his rents are?
It's just so lame. And then he's like, well, these are the average rents. This is what they don't. I'm like, dude, what's the highest rent? What's like just trying to get a little. And then finally, because he doesn't have any fucking takers, because he doesn't know what he's doing, he's like, oh, here's the rent rule. And I'm like,
let me guess. He's a residential broker.
I think so.
Yeah. There's a lot of good deals that come from residential brokers.
Yeah. Oh no, that's what you want.
You just
is
have to deal with the
5+
brain damage.
stuff that is not on CoStar. If it's on RMLS and it's commercial, that's how Sang buys a lot of his deals.
Yeah, good deals.
Yeah, because you get the rookie. People don't know what they're doing.
So what did we decide the art of the deal is? What is
Did we
negotiating?
even talk about negotiation?
Well, we were talking about giving the seller what they want. I mean, you have to decide what kind of negotiator you're. I would say that some of the best negotiators in the world sort of have ice water running through their veins, where they just look at a deal from, it's just the spreadsheet says this. I'm not that guy. I don't take a scientific approach. I take an artistic approach, and I look at real estate as the people, not the buildings and the numbers so much. But I think you do need to be careful. You need to know the numbers, but I think that you can also draw too hard of an edge to where you'll miss out on business because you're not really seeing the big picture.
I think for me, the best when it comes down to negotiation, it's what was I going to say? So Chris Voss, I'm trying to think of what I was going to try and reference here. Open-ended questions. How words. How can I do that? Not like, you want 500, I need 450. Well, how can I get 500?
How do we get there?
So you're now asking a question that puts them to be the problem solver in that scenario.
What we're really saying is, rather than being combative with the other party, be collaborative.
Exactly.
And find a way to get everybody what they need to make the deal happen.
Yeah. So Chris Voss,
Never Split the Difference.
And then the other one, Stories. So Pitch Anything by Warren Claff. One of my favorite books. So when I said education-based negotiation, I do that education based off stories. So I'm telling stories, cracking jokes to educate the seller of why they don't understand what they don't understand. And I'm not saying you're dumb, you don't understand that. It's like, hey, here's a real life story that I've been through that can educate you in a really non-combative way that doesn't get your amygdala fighting everything I am doing, thinking that I'm the bad guy, that gets beyond that into your prefrontal cortex based on the stories. We don't care about the numbers. We're feeling good. We're getting different chemicals flowing through your brain. And then you use the words like the Chris Voss side, right? So you built rapport, you've shown some expertise, you've created stories, you've got past their amygdala, and now you're using words of how.
That's when you're dealing direct with a seller.
Yeah.
When you're working with a broker, now you got to filter that through somebody else, and that becomes a much different game.
Yep.
Because you got to sell the broker on it.
Yep.
I think the best way to negotiate a deal is to not need the deal.
Well, that's the best way, absolutely.
Don't chase it too hard.
The best negotiation tool is send termination. So sending a termination or telling them to send a termination. That will tell you right now if you have a dead deal or not.
That's called the takeaway.
The takeaway is the best close.
Yeah, because you're in every deal, there's motivation on both sides that's varying. If you have a highly motivated buyer and seller, you're very likely to put that deal together. If one side or the other is not as motivated, or their motivation sort of dissipates over time, your deal will start to fall apart. Like a seller who has identified their dream property and now they really want to sell theirs, you get under contract, you do your due diligence, you go, holy crap, we got to ask them for $100,000 because it needs a fix. And by the time you get to that point, their other deal fell apart and they're just like, F you, I don't even really want to sell now. They're just looking for a way out of that deal until they're back under contract again on another deal. So motivation is super important. And what you're saying is, if you go into a deal, even if you're super motivated to buy it, you don't show that card and you act as if we've got plenty of deals to do, which we do, and we don't have to do this deal. We want to do the deal.
Yeah.
And if it can't happen at our terms, then we're just going to go do the next deal. And that puts you in the driver's seat, especially if the seller really needs to sell. And I would argue that today more sellers need to sell than ever before. And if they're on the market, some of them are becoming even desperate to sell because they're ready to make their next move, and they're probably just trying to get out. And the market just continues to deteriorate.
Think of the people, there's a lot of sellers out there like that where they're 5, 6, 8, 9, 1031s in.
Yeah.
and they're at 50% leverage,
Yeah.
and that was okay at their 4% interest rate, and then it's going to go to 7.
They lose all their cash flow, or they got to do
They
a
lost
cash in refi.
years of capital gains.
Yeah, you didn't keep your rent roll where it needed to be.
Yep.
You're not going to get the appraisal that you need on a refi.
Mm-hmm. I did want to touch about negotiating through people. That's one of the what frustrates me the most is negotiating through people who have their own best self, common brokers, in mind when they're trying to negotiate. Meaning, they're just trying to get the highest price so they can get the highest commission. They're not trying to get the deal done. And those are the most difficult people to
How
negotiate
stupid
through.
is that, though? I'm selling a $5 million building. I drop the price $100,000. My fee hardly changed. I get a deal done. Like, who cares?
Exactly, and that's correct. So we're dealing with this in the real. Like I've got this. We've been trying to do some deals, some off-market deals with these brokers, but they just think about their own fucking commission.
They should just think about getting a deal done.
Exactly, and so here's how this scenario has come up. There's been these properties. Everyone's been trying to frickin' wholesale them. So now they are talking to the broker, the owner. They've got a listing agreement. They're trying to get a price. Well, you don't work in the off-market world. I've shown him. Here's this wholesaler trying to wholesale it for $100,000 less than you're asking. Here's the other wholesaler trying to wholesale it for $100,000 less than you're asking. What does that mean? It means 3 months ago they were in escrow $120,000 less than what you're asking, and you're trying to educate them in this manner. You're like, look, I'm going to offer a lot more than this because they didn't understand what they're doing. They're off market. They're wholesales. They weren't finding the right buyers. I think it's worth more than what they're trying to wholesale. I understand you want $350. I'm going to offer you $300, and it's not going more than that. And it's funny how you don't hear anything for like 5 days after your offer is expired, and then 2 weeks later, like, oh, it's amazing. When you guys submitted your offer, another offer came in at the same time. And this is 2 weeks after our offer was submitted. So no, they're lying to me. Because if it did, they would have told us immediately. And number two, they would have let us play off of it. And then the other thing was, oh, well, they want all cash and they want a quick close and it's a development deal. No, that's not how it works.
I love the people that ask for all cash. I'm like, why do you care if it's a loan or all cash?
Yeah.
All cash typically means you're getting less money than you would through a loan, too.
Right.
I'm
So,
like,
and then so
They're asking all cash because they don't think it's financeable.
in this scenario, this isn't the seller. This is the broker putting these parameters on so they can get paid more and faster. So now let's fast forward. So as we're not hearing back from that broker, I'm telling Daniel, check in with them. Their due diligence should be up by now. They wanted a fast DD. We asked for 30 days.
Yeah.
Theirs must have been later.
Got that
later.
deal closed, guys?
Send an email. Oh, yeah, they're nearing the end of their DD. Oh, I thought we needed fast DD. They were 30 days in. Oh, okay, so that was a lie. And then you keep following. Oh no, they're going to close the deal. They're getting close to the end of their. Guess what? I got the fucking email yesterday.
Deal fell out.
Deal fell out. They didn't realize that the fire department wouldn't like what they wanted to do.
Yeah, good. Go back at 250 now.
Exactly. Fucking. I'm gonna just because I hate these people. I don't hate them. Just because I'm really frustrated with them. I think I want to do the retrade. Give them the same offer and then just retrade.
You're not even retrading. You're just starting over. It's like, oh, now we have new info.
And here's the best part. So they're trying to sell some other properties that Daniel met with the seller. One's a development deal, one's some apartments. So Daniel's met the seller. They're already in escrow with the buyer who's not going to perform, and we know they're not going to perform. Daniel meets the seller at these other properties, and the seller wanted 500. Daniel, 550. Daniel gets him down to 450, but our offer's 300. There's a huge gap there. We're not going to buy him. Those same brokers on the same land deal came. Guess what? We got these listings here. Man, he wants 550. I got him down to 475. I did so good. I got him down to 475 for you. And Daniel's response, oh, that's funny because he was going to sell it to me for 450 yesterday. So it's this frustration where brokers, we want you to get paid. You deserve to get paid. You go out, you do marketing, you meet these sellers, you get listing agreements signed. But you need to understand getting the deal done is significantly better than getting a little bit more commission. Mm-hmm. Getting the deal done faster and getting that off of your plate so you can go find the next seller and get the next listing agreement is better for you.
The best broker doesn't consider their commission. They look at the deal and they know that winning is bringing a buyer and a seller together, and as a byproduct of closing that deal, they get a paycheck.
Yeah.
It's not about their paycheck until the very end. That's it.
Performance isn't based on price. Performance is closing the freaking deal.
Close the deal.
Yeah.
Close the deal.
Yeah. And you could be a seller, hey, I got you your price 343 days later, and you're like, well, I would have rather had a lower price 200 days earlier.
One of the things that put me on the map as a broker was I would not do terminations. Like I would fight and fight and fight and fight. Like it was like I did have a few, but not very many. If I got a deal going, I did everything I could to get that deal to the finish line. And when you can show that you can bring a deal to the finish line, a lot of brokers just give up. Like the first thing that goes sideways, it's not going to hold together, just terminate the deal. Yeah. But I think there's always, especially once you get to the point where you're under contract, there's almost always a way to hold that deal together.
It's funny. I think people are more comfortable lying through brokers as well.
They are. Yeah. That's why you have them,
to
have that separation so that you're not dealing direct.
Yeah. We had this scenario. Buyer offered $400,000 on one of our $385,000 on one of our condos, and we're like, no. Then they offered $400,000. We said no, and then but we can only afford $400,000, so we countered at $415,000 because that's full price asking. Then they countered at $410,000. It's like, but you could only afford $400,000. So then we countered at $415,000, and then they got mad and countered at $350,000.
Which is a waste of paper.
Yeah, it's just that was just bullshit because they lied. If they just would have, because at that point, I don't know. I don't really want to sell it to you.
Somebody countered Trevor and told him that we had to pay him all cash in 48 hours with $1 bills if we wanted to buy it.
And then they reached back out to us later.
And they said, just kidding. We want to do a deal with you.
Because we were giving them the best offer they had on the table, and they were
mad at us for it.
I got that email from a seller. We should have taken we had verbal agreement. Then they go dark and they sign a listing agreement. 2 months later, that offer now we got on the market. It was a really good offer.
Yeah, it's not too bad.
Are you willing to still give me that offer? Maybe.
You want to hear? So this is how we work through one deal that people can take away from. So this was like a small plex deal. I don't remember the price or whatnot, but basically this thing, you go through inspection, you're like, holy shit, this thing's really fucked up. Like, okay, we can still pay you the price, but we need you to lend us the money for the repairs, but you don't have the money to do so. So just on the seller's closing statement, generate a note, all the repair money, you can hit the same price for them. They can give you the line of credit needed and then take it from there to actually make the deal work on both ends. So I think it's interesting to start using notes in a lot of those cases.
You'd have to be careful with the loan product you use on that, because the covenants might say that that's the seller participating in a down payment or something like that.
And that's where you got to have your lenders built out, right? Yeah. Like I've got my bridge lenders that are okay with seconds as long as I structure them correctly. They keep them on books for me specifically.
And really, that's even not even a line of credit. You could just do it's really just a seller credit, but they didn't have the money to give that to you until you close.
Yeah, you can do it as a seller credit to them pay on close. So now they have the money, and then they can pay the contractors out on their closing statement is another way. So, or you can blend it with a portion too. So like they don't necessarily always want to give the credit because it's a loss to them.
Yeah.
So maybe you give a credit for fixing a portion of it, and then you have a note. And then once you have other pieces, you can start securitizing other pieces too.
Yeah, if it's cross-collateralized.
Yeah, you can get a line of credit. So like a seller can give you a line of credit, like a HELOC, just like a bank can on any property you own.
Mm-hmm. Yeah, it's an interesting tool to think about, and this is for newer investors. When you're negotiating a credit, it's better, in my mind, to take the credit, because if you just lower the price, you say, hey, we got a $20,000 problem, you lower the price, all that does is just lower your payment a little bit, maybe lower your down payment a little bit. But when you ask for $20,000 credit, seller credit on the closing statement, you get a check for $20,000, and now you might bring the same down payment and payment, but you get $20,000 back at closing. You can go use that to put your roof on or do.
Or you can do an escrow holdback and have them have a check to escrow to then pay the contractors.
Yeah, escrow. Some escrow companies aren't real excited about doing that. Yeah. Typically, you got to have it all spent in 6 months, and they don't want to manage it for you.
But if you're lining up your contractors ahead of time, you can just start.
If you're lining them ahead of time, yeah, you can actually pay your contractors right off of the closing statement. Or you could have those particular contractors be able to go tap that money out of your impounds to pay their invoices as well. But it's a great way to get a seller credit instead of reducing price, so that you have the cash to go actually do the work. Cool. I think we covered a little bit there. That was good. You don't think so? We'll keep going.
Good. No, we gotta go.
We can go another hour, I think.
We could go and we could talk forever, but we have to physically leave.
Oh, we have to physically leave. Yeah. We have things to do.
I gotta go to the dog park. Max needs to run.
Oh my God, we're always going to work, and Mike's always going to play golf or run his dog around. Like you live, I think you have the time freedom thing.
I'm just in Salem. That's all. When I'm in Salem, I have a little more time freedom.
Wow, I think you're part of the 0 to 100 tribe. You have R1.
I just am not. I have too much ADHD.
No, cut them off. We gotta go.
Let's go. Adios. Bye, everybody.
All right, guys. We love you, Deal Junkies. Thanks for listening. If you like this episode, please share us, and we will see you next time.